Thank you, Heather. It's great to be at this point of our journey. Welcome everyone to our Innovators at Citi series. This is a virtual series that we bring, where we bring together luminaries from inside and outside Citi to discuss top trends and technologies that impact financial services. Um, Please remember there are questions. If there are questions, please share them on Slido with hashtag innovators, and we'll have a few minutes at the end for questions, and it should be an interesting discussion. I'm really excited about the panel today. And so, as Heather mentioned, today is a special edition of Innovators at Citi. We are celebrating our 15th anniversary. And so this gives us an opportunity to talk to investors as well as entrepreneurs about how both fintech and venture capital have evolved during this time, and we have a great set of folks to discuss that with. So with that, let me welcome the panelists onto the screen here. Hans Morris is the managing partner and founder of Nyca Partners. Hello, Hans.
Hello, nice to see you, Arvind.
Good to see you. Angela Strange is general partner and Andreessen Horowitz. Hi, Angela.
Hey, good morning.
T R Vishwanath is co-founder and CTO of Glean, a portfolio company. Vish.
Hi, everyone. Excited to be here.
And finally, Ari Tuchman, CEO of Quantifind, which is also a Citi Ventures portfolio company. Hi, Ari.
Hey, Arvind. Thanks so much for having me.
Thank you for being here. And what I'm excited about is not only are all of you accomplished in your respective areas, but you also have very different backgrounds. So I wanted to give each of you about a minute to talk about your background, but also your firm and your practice in the case of the venture capitalists here, as well as your companies, Vish and Ari. So Angela, maybe start with you.
Yeah, I'm a general partner at Andreessen Horowitz. I have been at the firm not quite as long as you've been doing Citi Ventures, Arvind, or you've been running Nyca, Hans, but over a decade now. So we started as a small fund. We are now a very large fund that invests across all stages, all sectors. I focus on financial services and insurance, now more broadly AI across the enterprise. Prior to this, I had a product engineering and product background. And so that tends to be the lens that I take with my investments and the reason that I love to come in at the earliest stages.
Thank you, Angela. Hans?
Well, my career, actually, I started at Citi, or Smith Barney, which then became part of Travelers Group, which then merged with Citibank in 1998. I spent about 20 years as an investment banker, and I ran the financial services group at Smith Barney and then Citi for about 12 years. And then I was chief operating officer of investment banking. And then I was the CFO and head of technology and operations for what was then markets and banking, but essentially the institutional clients group. I then left in 2007 and went to Visa as the president during the restructuring and IPO of Visa. And I worked for 4 years at General Atlantic as heading their financial services group, and then started Nyca with the idea that there were at that point, let's say 500 or 1,000 fintechs in 2014, and that had gotten venture funding. And I felt, but there was still so many big problems in financial services. And at that point, the venture firms didn't have a lot of specialization in financial services. Now that's changed quite a bit, as you can tell from Angela's discussion. But so that was the idea of Nyca, and we've been investing now for 11 years and have many overlaps with you, Arvind, and Citi is also an investor in Nyca.
Thank you, Hans, and it's always great to have an alumnus back on the panel speaking to us. Maybe turn it over to Vish, to yourself and Glean.
Hey, everyone. I'm Vish, co-founder and CTO at Glean. Prior to Glean, I spent close to 10 years at Meta and before that at Microsoft. At Glean, our goal is to provide the best workplace search, AI assistant, and agentic platform that can help every employee in the enterprise transform how they work using AI. And the way we believe we can achieve this is because we deeply connect to all the enterprise systems of knowledge We deeply understand the organizational structure, and we understand every person's goals and priorities for the day, for the week, for the month. And using that, our aim is to provide a workplace AI assistant and agentic platform that can be your coach, your resident expert, as well as your assistant that can help you productively do repetitive tasks both at a personal level as well at a business process level.
Thank you,
And the
Vish.
key thing for that is actually deeply understanding the data governance, the security, and the permissions that every organization has, and respecting those without requiring the company to actually go and change how they work or how they manage their policies.
Excellent. Thank you, Vish. And then Ari.
Thanks, Arvind. CEO and co-founder of Quantifind. I got into the AI world a little more randomly. I was first applying signal processing to detecting buried explosives, and then through a series of random walks, ended up launching Quantifind, which focuses on anti-money laundering and KYC automation. Our mission is really to bring the accuracy of the largest language models to the speed and scalability of the smallest ones, and to be able to be performant to automate a lot of the AML KYC workflow at the scales that the largest banks in the world need today.
That's exciting. Thanks, Ari. Again, just a reminder for the Citi colleagues to submit questions on Slido using the hashtag Innovators. Sitting here today, I can't help but reflect on sort of the last 15 years of our journey, but frankly, it's been about 15 years of sort of the fintech industry as we know it today. During this time, venture capital has shifted massively. One of the things I think about is how dramatically venture itself has shifted, and not just sort of the rest of financial services, right? So venture firms are much larger, they're more varied, and the amount of funding has risen tremendously. We're up to about 205 billion in venture capital invested by mid-year of 2025, compared to about 52 billion in all of 2010. So that's a huge increase, and that probably 2025 is going to be lower than 2021, right? So in other words, we went through sort of a local maximum here, and in fact has come down a little bit since the interest rates started to go up. And growth of that scale has affected, deal size, structure, exits, everything about how entrepreneurship is conducted in the ecosystems that we operate in. At Citi Ventures, one of the main goals for us is to help deliver, on Citi's strategic goals by investing in tech capabilities and financial services capabilities to benefit our clients. And that's what we've been doing with over 200 investments in that period. We have over 100 companies in our portfolio, 30 plus exits. We've been, partnered with many of you through this journey, and we've been very fortunate to have been involved in many very successful companies in the past as well. But not everyone is a CVC, corporate VC or a VC, which means that everybody approaches deals with in a different way, with different perspectives. And as Hans mentioned, and many of you as well, we worked with you, Hans, in several capacities. And as you mentioned, and we talked about, I remember meeting you in 2014 when you were setting up Nyca Partners, and you were thinking about the name, about New York and California being the two major hubs for financial services innovation. You have a long history with Citi.
I would say it's very hard to come up with a name for a venture capital firm.
Yeah, and you did a good job of doing it, by the way. And so, what are your thoughts now? Having leading now one of the top venture capital firms in fintech, both about how the fintech world has changed and your experiences of working with corporate venture capital, which has also grown in the last 15 years, and with Citi.
Well, it's a broad question, so let me break it down a couple of parts. One, I think it's interesting because I went back and read a blog post I wrote in 2014 where I outlined what are some of the problems, like even 2014, why can't you get a mortgage in 48 hours, close a mortgage in 48 hours, and why can't you easily arrange financing as a small business when you have, you're a consistent participant in buying something from a marketplace, and why can't I easily understand some of the decisions I need to make as a consumer and inside of a bank. And so some of the things I would say are still pretty terrible. They haven't been, the questions haven't been answered. But I'd say in many ways, it's quite extraordinary to think how much things have changed. And I also noted that topics like banking as a service, using another bank to originate the whole loans or be the regulatory entity. That was a brand new concept in 2014, and the term banking as a service really hadn't existed. PayFacs, which are now ubiquitous in everything, and in payments is around PayFacs, and that was a brand new term. Data aggregators like Plaid were just incipient stage. I think they did their Series A in 2014. RWA meant risk-weighted assets to bankers, not real-world assets. The idea of changing your core or having it, a completely, actually even having a cloud-based core was like, absolutely impossible in financial services. Data was not properly organized for many of the complex institutions to make the type of decisions at the speed that they needed to. So pretty much everything was ripe to be changed. All that infrastructure that this was sitting on was, typically 30 to 40 years old, and all needed to be real time and modern, and have the type of experiences that both consumers and businesses are grown accustomed to with other types of technology. So I look at it now and I'd say, wow, it's remarkable. We now have some really powerful, big generational companies that have been created. I would say Nubank and Revolut and Stripe would be all good examples of that. And also the infrastructure has been set, so you don't have to go build all this infrastructure. Even new founders can just get a lot of state-of-the-art infrastructure and assemble it quite quickly. And then I think we're seeing dramatic transformation of the digital asset world, which got big implications, not just in payments, but I think maybe more powerfully in some ways, I think, in digitizing like securities and bank loans and private assets, which have been resistant. That idea has been, people have been trying to do that forever, but now I actually think that can happen because of the evolution of the infrastructure, which is now much more ready for it, the size and scope of the engineering community and people that are very familiar with a lot of this technology, the fact that that banks and financial institutions and regulators are much more open and willing and seeking to change rather than resisting it, and are moving quickly to evolve their own infrastructure. So I actually feel like it's been a lot of change in the last 15 years since you started. I think we're going to see, faster and more dramatic impact to, way profit pools are managed, the way customers interact with financial institutions. We're going to see quite a bit more soon.
It's actually a great perspective, Hans, because as you were talking, one of the things, and where you started, in fact, is that a lot has changed, but some things are still the same. So if you go back, 10 or 15 years, and you're talking to an early stage startup that's saying, "Hey, we want to revolutionize the way you get a mortgage." To use your example, that's still not there, right? That sort of that digitization, and especially when it's in a very regulated industry, that becomes harder. But for the latter point that you made around, for example, the advent of cloud and sort of digitization and the speed at which you can actually innovate, we talk about sort of going back 20 years, we've essentially lost about 3 or 4 zeros in what it takes to launch a software company, from maybe 5 million to 50,000 or something. You can legitimately launch an MVP, and that's just been brilliant and helps all industries, not just financial services. And so I wanted to bring in, Ari and Vish as operators here. And again, we're lucky to be investors in both companies. So maybe Ari, turning over to you, and in your journey of sort of building Quantifind and working with large financial institutions, maybe reflect back on sort of the changes that you've seen.
Yeah, look, it's certainly a very dynamic situation now, but I think that a lot of the sort of trends that people talk about being able to get off the ground running with significantly fewer assets and capital is not quite as true in a heavy regulated space, right? The InfoSec requirements, the sophistication needed to work with a bank of the size of Citi, getting a prototype out is easier than it ever used to be. That's certainly true, right? And you can do that extremely cheaply, usually without even raising venture capital, right? Whereas that didn't used to be true. But to have a product that can be production ready for a GSIB bank, that's still very expensive, right? And I think that hasn't really changed as much as sort of some of the other quick to market type of approaches. I mean, on that front also, look, coming out of academia with no knowledge of how to navigate the complexity of a tier one bank, that's where Citi Ventures has been incredibly helpful, right? Knowing that there's, 12 different sales that need to be done, right? Ranging from legal to procurement to InfoSec to the business and all the matrix business, even discovering the opportunities that are available, right? And that's where I think it's not only the capital, it's really large banks are different, right? And almost different from anything else. And the knowledge of how to do that has not gotten easier either.
That's a great point, right? Because one of the things that we think about is how do we help our companies navigate Citi, because sometimes that in and of itself can be one of the more complex things. And maybe share your perspective, Vish. You've obviously we're partnered with you as investors, but you've worked with other large financial institutions, and maybe as at Glean, what have you seen?
Yeah, I think we are very fortunate to have Citi Ventures as an investor, and that has been like super helpful for us, like especially as you said in large companies, like being able to talk to the right teams and being able to find the right business problems to solve with Glean is a very important thing. And Citi Ventures, you have helped a lot with like internal intros to various teams at Citi as well. And we have been, one thing that we have found particularly useful is also being able to participate in the Gen AI summits that Citi organizes, and that has been like super helpful for us to showcase our product and illustrate our business value. And I think this is like, I think one thing. The other thing, working with large companies, financial companies, is like is the whole focus on being able to respect the regulation requirements and other requirements that companies have, and that requires a lot of understanding of the space. And that has been useful both in our partnership as well as with like talking to other financial companies and making sure Glean as a product can work really well for them.
Yeah, that's appreciate that, and we appreciate that partnership. And Angela, I wanted to sort of with you broaden out, if you don't mind, sort of to the topic of CVCs. I mentioned it at the top in the introduction that in the same 15 years, I mean, corporate VCs have gotten a lot more active, and I'm sure you've worked with a lot of corporate VCs in the companies that you are involved with and are on the board of. And so I would love to hear your perspective about your experience with corporate VCs, and sort of the experience of entrepreneurs and startups working with corporate VCs and how that has changed.
Yeah, and I think we're lucky. I just looked it up this morning to have more than 10 companies that we work on together with.
Yeah, exactly.
So I've been very fortunate to get to work with your team for a long time. I think stepping back, there's this common misperception of venture capital, that venture capitalists sit back, entrepreneurs come and pitch them, and then you just get to pick the best companies. And in reality, it is completely the opposite. Like it might be one of the most competitive, I say I'm in a very intellectual but competitive sales and customer service job, because the best people like Vish and Ari have many people that want to give them money. And so the onus is beyond the money, which is the commodity that everybody has. What is your product? And I think you have to come up with a strong pitch of what that is. And in theory, CVCs would have one of the best pitches, because what do enterprise companies want? They need customers. They need big customers. And as anybody who's tried to sell into a bank, it's really hard. Like to this point, it's 12 different sales. And so I think what Citi does particularly well is they actually deliver on that promise. Because I think, as Arvind would know, it is hard to set up a venture capital firm, but then hard to build all of the relationships across the different commercial entities such that these things are aligned, such that you bring the companies that really help drive the business forward. And then the leaders of those business units are motivated to talk to some of those innovators. And I think that's one of those things that Citi has done very well, and one of the reasons we really like working with you guys.
No, I appreciate that. And I think one of the things we've been lucky with is working with internal business partners who've been very innovation friendly. And so we have excellent internal business relationships with them. We try to understand what their priorities are, what their sensitivities are, so that when we bring companies in, there are real outcomes possible, right? And we increase the chance of success of that partnership. And I think one of the things that I was excited about on this panel, especially with Angela, yourself, and Hans, is sort of being the OGs in fintech investing. And Angela, you do a lot of thought leadership, and you've talked about sort of different trends over time in fintech. I think Hans, you addressed some of it in your opening response, but I'd love to hear your perspective, Angela, in terms of the breadth and depth of the portfolio at Andreessen and sort of the change over time. What are you seeing?
Yeah. I love to look at the world in terms of product waves. And I think looking at financial services in terms of product waves is particularly interesting. And from an investment perspective, a lot of the most interesting investments happen at the start of one. And we'll talk a lot about AI, I'm sure, which is the biggest wave going on. But when I started investing, like we were still in the sort of internet PC wave. And so what did that mean? A lot of financial services or fintech companies were just taking what was done in the offline world and putting it on the internet, right? So Lending Club, now you can make these loans very quickly. PayPal, now you can send money via text message or email versus sending checks. And so a huge wave of successful companies that came there. And then if you look at the mobile wave, all of a sudden everybody had a bank in their pocket, right? You mentioned like Nubank, which grew tremendously in Brazil, but in the US, it was, all right, let's come up with a very good product hook, right? Chime originally was get your paycheck 2 days early. Robinhood, now you can trade fractional stocks for free. Whole wave of companies that started with mobile. Then the cloud era, which was the advent of, as Hans was talking about, banking as a service, or as I love to say, every company will be a fintech company, which just means everyone needs to monetize with payments, lending, and there's a whole new spawn of infrastructure layers that come out of there. Lots of good fraud companies, lots of good payment companies. And now I think it's the most exciting wave yet, which is artificial intelligence and lots of things, but that is doing kind of two primarily interesting things. A lot of labor can now turn into software, starting with the roles that like banks are having trouble hiring, and we talk more about the spaces there. And then the second piece, to sort of Hans's point of old systems, the risk of replacing those systems used to be too high vis-a-vis the reward. But now some of the replacement systems are 10x better versus 2x better. And so we're starting to see some of that infrastructure turnover. And so this next wave of companies coming up is particularly exciting.
Yeah, and we do want to talk about the AI aspect of things and how we've been thinking about it, but we'd love to hear about how you all are thinking about it as well. And Hans, maybe get your perspectives as well. First of all, banks are partnering a lot more with fintechs. Angela, you mentioned Lending Club. I tell people when I first started at Citi, Lending Club was the hot company, and then shortly thereafter, Square So it was Square, P2P lending, and mobile payments, right? The mobile payments world was not fully settled. Apple Pay and Google Pay, et cetera, were not settled. So it was mobile payments, P2P lending were the big topics. And I remember this chart that I think it was CB Insights or somebody put out, where they showed how, a few years later, every aspect of a bank's, businesses had startups coming after them, right? Whether it was on the institutional side, B2B, or on the consumer side. And so now it's a very, very different world, that we see in the intervening 15 years, Hans.
Well, let me give one observation that goes back even before Citi Ventures was started, which I think if you go back, the multi-decade trend is that technology keeps reducing the cost of information and also reducing friction associated, which sometimes creates that information barrier. And that's been true, if you look what Bloomberg did, for example, to market data in the mid 80s. And the ability of companies, there were probably 200 companies. When I started, I remember in the training program, they said there's 200 companies that have access to the bond market. And now it's thousands of companies and non-investment grade companies. And the whole loan market moved to the capital markets. And then, as Angela was saying, P2P lending was another example that there's enough data now that you can confidently move that to a capital market investors. You don't need to have a competitive advantage of a bank origination. So my view is that multi-decade trend continues, and it changes the profit pools in where the profit is captured. And so the institutions, the insurance companies, banks, asset managers need to evolve as those profit pools change. And much of what you do then is facilitating transactions, not holding the asset as the source of profit. And that therefore means you need very different infrastructure, and things get really fast. This is like how volumes exploded, transaction volumes exploded on Wall Street in the 80s because transaction costs just declined. So I think what every single institution needs to have is you need real-time systems throughout. You need very sophisticated risk capture. You need to be able to route transactions to the most efficient, all-in lowest cost, including a risk cost. Risk then increases dramatically because with real time, you have no ability to reverse transactions in cases the money is gone or it's expensive to get back. So the nature of the infrastructure of a successful firm in this environment will be different. If we did any moment, if we went back and looked at what was the single biggest source of profit pools each decade, in many cases that would be completely different today. And so I think that's what we all have to keep in mind is the speed is now, I really do think, accelerating, and Citi and other important banks will be in the center of this, but what you do to earn that is going to be very different 10 years from now.
Yeah, that is excellent perspective, and I think in the middle of that, I want to sort of move to this next topic, which is with the advent of AI and Gen AI that we're seeing across the board, and at least in my career, this intersection of financial services and AI is incredibly exciting. And the way I think about it is, front to back, you can impact the operations of a financial services company from, how you meet customers, how you acquire customers, how you market to them, how do you service them, how do you, mid-office functions and back-office functions across the board, how do you prevent fraud, how do you do, compliance and regulation. And so that's why, I think it's excellent to have Ari and Vish here because they have AI as an integral part of what they do, and that's how they were started. And so, so maybe start with sort of the operators here on the panel in terms of how you're incorporating AI. Give your perspective of that intersection of AI and financial services. Ari and Vish, and then I do want to turn it over, Angela, to you in terms of what you're seeing at Andreessen in this intersection, and how AI is really impacting all of financial services, really. Ari?
Yeah, happy to start. Sure. So again, we're coming from the regulatory side, right? We're looking for anti-money laundering, anti-fraud, KYC sorts of solutions. And I mean, AI has been ridiculously enabling in terms of what's possible from a comprehensiveness and a consistency side. So by comprehensive, what I mean there is historically, banks used to look at transactions to determine anomalous behavior. And we can now look so much deeper than that. We can look at counterparties, we can look at networks, we can look at relationships, we can look at everything about an individual, even when there's very little information, right? And the analogy I like to say is historically we used to, when you're playing poker, you can play the hand, right? And historically, that's how banks used to play. They would play the hand looking at the transactions. And any good poker player knows that you have to play the person across the table too, right? And AI has unlocked that. And that has allowed us to, look at so much more of a 360-degree view of the individual, which again was not possible before. That's really on the comprehensiveness side. But on the consistency side, performant AI, and that means knowing when to use a trillion feature LLM and when not to, right? Consistency of doing the same sorts of deep dive analysis on risk facing a bank at every stage of the touch point, right? So that means even at the transaction level, when you need to have SLAs less than 100 milliseconds, how do you still go deep? How do you still play the person and not just the hand, right? And AI has unlocked that. So that's been incredibly exciting. I think the flip side to that is the bad actors have it too, right? So
Right.
I wish I could say that AI has given the banks an advantage. I think in some ways that playing field is somewhat level, and we need to use AI just to keep up with it.
Right. And we see that in security, right? So the bad guys get, the same powerful tools that get leaked from different places, and then now, the enterprises need to defend, and governments and everywhere, everybody else need to defend against that. And it's a great point about sort of playing the player and not just the hand. And I think that that's a really great metaphor for it. And Vish, in your case, you actually have a more horizontal platform, but maybe there's some case studies with or without naming names of financial services companies and how Glean is being used.
Yeah, so actually we do have a lot of customers and use cases across banking, investing, and insurance that are resonating. And I think it all comes down to deep under personalization, like deeply understanding the client to provide better relationships, advice, as well as being able to do a more thorough analysis and real-time recommendations based on that. So, because employees have access to a lot more relevant information about the client as well as what is happening in the markets and so on, they can provide much better personalized advice that'll help improve the customer satisfaction and increase customer investment. And similarly, with a deep personalization and understanding of the client, you can provide like real-time recommendations, which the person would not, customers wouldn't have thought about themselves, right? That's on one side. The other side is around like, we have been told that it's much easier to build much more innovative multi-channel financial services and products because it's never been easier to do deeper research.
Right.
You can sort of like have a much better understanding of the data, which is how is the product being used, what are competitive offerings, what is the market context, what are customers actually asking for, like actually by going and at scale understanding what are the conversations that employees are having with customers and being able to do processing of that at scale. And so getting insights for new products. The second thing is actually building the products themselves using coding tools and using Glean is being used to actually accelerate the software development of these digital products significantly. And then the final thing is a sort of a more of an intangible, which is it is now table stakes to have like a very strong AI offering that helps employees actually to attract top talent and retain them.
Mm-hmm.
Uh, One of the biggest things that Glean has been used for is to speed onboarding, right? So when someone joins the company, how do they quickly get context on the enterprise and how can they hit the ground running? And that's like a big thing, both for the company as well as for the employee satisfaction, right? And ability to retain the best folks on the team. And so that's also an consideration here.
And that's important for every industry, not just financial services, that last aspect of it, which is a very interesting point. And if I could come to you, Angela, and maybe then Hans, maybe from you, we would love to hear about sort of your investment thesis in this AI intersection with financial services, to the extent that sort of you think about the world that way. How are you thinking about AI investments in fintech, I guess?
Yep. So I'll highlight three themes, although there are many more. The first one is this software to labor theme. And a great example of that, hard to do a quiz over Zoom, but what is the fifth fastest growing job in the US over the last 2 decades? Many of your audience probably knows it's compliance. Compliance
Right.
people of all levers. Number one are manicurists and pedicurists, which I think will take a little while before AI comes. But before, your solution for compliance was, sure, you could have better software, but you had to hire a boatload of people. Now, a lot of things like checking sanctions alerts, some of the KYB, like that can legitimately be done traceably, reliably with AI. And so this very unsexy area has now become one of the hottest areas across banking and across insurance. And you can come up with a bunch of other hard to hire roles that can now be done with software. And that's also replacing a lot of the BPO spend. So think voice agents for collections, call to activate your card. So that's a big, big theme. And that's where a lot of companies are focusing. And the pitch there is I will come in with that wedge, and then I will figure out how to sell you more stickier software. So trend one. Trend two is the opposite direction, which is I can now, for instance, rebuild your mortgage servicing platform. And we have a company in New York called Valen that has done that. And before, you wouldn't really care that much because I might turn your 5% margin business into a 10% margin business. But now I've made it a 70% margin business, and your competitors are replacing. And so the rip replaces are definitely happening. And so we're much more open-minded to the teams that have the strong knowledge that are doing the hard build and the hard sell. And then the third theme is earlier, and Vish is probably smartest to speak about this, which is all of you across Citi probably have great ideas that if you could write code and build software, you would dramatically improve your day-to-day life. You would get rid of tasks. And like that internal app building has traditionally been too hard. And so now, like, you can vibe code consumer sites, no problem. I think the next is going to be empowering any employee across banking and across insurance to make the apps themselves. And that requires, services like Glean and lots of other things that help safely give access to the data that you want, but then also provide the tools to build those apps. And so I think that's the next theme that's going to be interesting to watch.
No, that's excellent. And on the second one that you mentioned, which is the mortgage servicing platform, I guess the idea is that you're designing a platform with AI at the heart of it, I guess. And that's sort of what you're talking about, Angela.
Yeah, because most, to use an example, not from financial services, historically, software was designed, here's the software, and then I'm going to hire all these people to do tasks on top of the software, right? And so if you were going to design that de novo, knowing that all the tasks on top can also be part of the software, you would take a very, very different approach. And the end result is often a 10x better product that doesn't require humans to do all of these tasks.
No, that's excellent, and it sounds like it's a really great way to think about AI investments in financial services. And I want to sort of see Hans with Nyca, how you guys have been thinking about it as well.
A couple of things are very similar to Angela, everyone, and then maybe a few differences. One is that one thing that's very similar is the bank modernization, just the precision with which you can both will document the existing systems of record and I'll tell my little anecdote. Remember at Citi for 5 years, technology and operations reported to me, and we began core conversions in it was going to be 50 countries using a company that came out of Citi, created in Citi in India, which was iFlex, which now is part of Oracle. But we did many core conversions, and just the documentation and planning for that conversion was probably 3 years at least. And now you can do that so much faster and do precision recoding of COBOL code using AI. And so that is, and there's several companies that do that. Again, it takes a lot of expertise and knowledge, but I think it will enable faster system modernization. The other thing that a summary of our way of Angela's saying that the software to people ratio we say focus first. We like focusing on narrow verticals within financial services where there's a very specific problem, and you've got subject matter experts that know every aspect of that. They know exactly the vendor stack that you're sitting on top of. They're very expert in all the compliance rules and what the data infrastructure looks like. And you're able to do two things. You can nest right into that, but then most importantly, focus on applications that make expensive people more efficient. Focus on your most expensive people, because within financial services, in every area, there are very expensive people doing manual tasks that many of which they don't like doing. Like client in treasury services, the client calls up with something that something's not properly reconciled, and you need to figure that out. And in many cases, that your operating system for that is email, and and you have people making a lot of money sorting that out because it's very important to the client. And so our view is focus on those types of applications to solve problems in all kinds of deep verticals.
That's excellent. And you also sort of mentioned about the aspect of software development itself, which, by all accounts seems to be that first area where, we're starting to see, real gains in terms of productivity, right, Hans? And I wanted to actually take that to the software company operators here, Ari and Vish, to see like whether you're starting to see those gains from Gen AI coding tools, coding agents and such within your own operations. And the reason that's important is banks have vast numbers of developers to build and maintain internal tools. And so, they always have a list of features and bugs and all the stuff to get to that, you're never, completely up to date with that. There's always a long list of things. And is that something that, we're already starting to see real gains? Maybe Vish, come to you first.
Yeah, absolutely. I think we are seeing gains across the entire software development life cycle, right from the point where you want to decide what features to prioritize to add to your product. Like, how do you do the research? What are the pain points? What are customers asking for? Being able to mine all the conversations in like Zoom transcripts and Gong transcripts and so on, and to come up with what are the most important things to prioritize. Then the whole interaction between product management and design. You can actually use vibe coding to sort of illustrate proof of concepts, and it's never been easier to prototype things and actually experience what is actually a compelling experience, right? Instead of writing something in a document, you can prototype something really fast. It's never been easier to actually build something, throw it away, and build it again for real, right? And then engineers simply love using AI for coding, and because it eliminates a lot of the boilerplate and uplevels the abstraction at which engineers work. Then when it comes to maintaining these systems in production, there again, products like Glean and other products can actually hook into the production systems, understand errors that are happening, and then trying to auto triage them. And even in some cases, like, auto submit like PRs for review that fix these issues. Like at Glean, we have agents that actually go and monitor production systems, and using the enterprise context that Glean has, is able to diagnose the issue and either page the relevant experts for that system, or even like draft a suggested PR. And
Right.
similarly, in Slack and in other channels, when someone asks for a feature request, hey, make this button more prominent, or like, this flow should be more intuitive. Some of these lower level, easier things that can be done can actually done by AI, drafting a PR rather than engineers spending time on it. So it's been like a rising tide that's lifted all aspects of software development.
Oh, that's excellent, Vish. And I don't know, Ari, if you have anything to add on that particular topic.
Yeah, I mean, look, we certainly see enormous efficiency gains using a few different sort of AI copilot type assists, but mostly on things like automated testing, UI components. I mean, in terms of our core AI kind of data science innovation, we don't really use those. I think there are concerns about putting data, training data that we have, certain restricted rights on, exposing those in terms of
Right.
exposing IP. So on a lot of the more perfunctory stuff, we're seeing huge savings, but not on the core kind of AI model distillation type stuff. The place that has been game changing though for us in terms of speed to development is synthetic data generation and data labeling. I mean, 5 years ago, we were spending a lot of money to outsource and a lot of time internally. And, you mentioned, your expensive people don't want to be doing those jobs either, right? Like my top AI engineers do not want to be labeling data, and they don't have to anymore. And that has been a huge, huge change.
Oh, that's excellent, Ari. Thank you for that. I know we have questions from the audience, and I do want to switch over, but I have one last question, Angela, for you and Hans. What is one way you're using AI to within Andreessen, to run the venture capital business? So maybe one idea from you and one from Hans, and then we can switch to Arthi.
Yeah, one way to describe venture capital is that it's a broad intelligence game. And so you need obviously the human signals, which is all of us going to events and meeting people, but you also need all of the data signals. And so we've built data platform across everything, pulling in all external signals everywhere.
Right.
Just a great way of tracking anybody that we've met, if they're changing jobs, if their companies are inflecting, if they're hiring more, if there's something that we can do to help with. It's just really helped us be sort of more efficient and more responsive.
That's excellent.
Hans? We have what we call frameworks, how, take a complicated topic, distill what are your key objectives, what key ideas, what's your hypothesis, how are you testing it, who are the relevant companies in it, what facts have we determined that will help you make a right decision within that framework. So we can do what we call a level 1 framework, like in 10 minutes.
Right.
It's amazing.
Right. And either of your firms experimenting with like Gen AI based memo generation? Like, are you guys using Gen AI to frame memos, for investment memos?
We sometimes do, yes.
And they're all starting to sound similar. Hopefully not, right?
You can tell they don't have. Yeah, actually, the grammar is better than some of our associates, I must say.
I think the thing that's been interesting, and this is we get the question a lot, like how do I help my team or my company use AI, and you really don't until you see something that dramatically improves your life that is very relevant to your specific job. And so I think across the company, we've had, our infrastructure investors helping, people in ops or legal or whatever, like, hey, you do this thing, this is how you would actually build an agent to do it. And like, once you do that once, it really, really, really changes it. And so now we're seeing it come up in all sorts of unexpected ways. And like, we very much do a job of highlighting that everywhere.
No, that's right. And there's a lot of sort of that emergent behavior, right, when it comes to AI, which is great.
Yeah.
Okay, maybe turn it over to you, Aarti. I know there are some questions from the audience, so we have a few minutes for that.
Yeah, absolutely. And we have a ton of questions. So thank you all for this conversation. I feel like each point could have been its own discussion. But we're going to start with we talked about a lot of funding, over nearly half of funding in AI startups. Valuations are skyrocketing. Are you guys seeing tangible ROI? Are there measurable, returns, or are we looking at a bubble? What are your opinions around this?
Maybe the question to investors, the investors here.
Yeah.
Go ahead, Angela.
Listen, I think we are seeing unprecedented scale of growth of companies, right? Like within 3 short years, there are 1 billion people using ChatGPT. I can name an innumerable number of companies that have gone from 0 to 100 million ARR, not valuation, like actual revenue in a year. And so like our view is the markets have gotten so much bigger, the use cases have gotten so much bigger, unlike other product shifts where, if you wanted the internet, you needed to physically lay cable. Now all of that infrastructure is basically in place. And so I think we're still pretty early days in what these companies can become.
Yeah, that's a great point. One of the examples that came to mind for that, Angela, to your point, is we were talking to an AI-based company yesterday. They'd been around for a few years. They had a few million users, but not a lot in revenue. And then once Gen AI came in, they were able to use Gen AI into the platform. In 12 months, their revenue has 100x'd, 100x in the last 12 after they introduced Gen AI. And so we're starting to see that kind of revenue growth. So in other words, your point is, maybe there are some aspects of it where the valuations seem very high, but we've also never seen that kind of revenue growth in any industry in the past. And that's a great point. Hans?
Yeah, I think to me, so we don't invest in the big horizontal type platforms, which are creating LLMs, for example. We, as I said, are focusing mainly on these narrow verticals, and in some cases valuations are really high. Some cases they're not terrible. But I also think there's a lot of risk about no one really knows what is going to be the adoption use case and how sticky this is going to be. So that's, you believe
Right.
it, I think it will have huge impact, but a lot of it is to be determined. I think on the ROI, if you ask, I do the same thing you do. I often talk to financial services companies about what impact they're seeing on ROI, and in many cases, right now in budget season, this is a very common topic. Are we, can we start taking heads out? And it's not clear you can, although I think often CFOs are insisting that you take it out, but the users have to put their money where their mouth is.
Great. Next question, Arvind.
Yeah. I would, the one question, probably only have one question, and time for responses from all of you guys. But I know at Citi Ventures, we're already thinking about what's coming next year. What's on the horizon? I'd love to hear from all of you guys. What's the one trend? What's the one thing that you think is coming in 2026? Maybe we start with the operators on our end, Vish.
Yeah, I think next year is about, this year is a lot about, we have seen the promise of agents and certain use cases like coding agents where it has really taken off. And I feel next year is going to be the year where we will see agents much more widely used for a lot of different use cases beyond coding. And with the improvement in the instruction following capability of models and the ability to do longer range tasks, that is going to be a much more common way in which people work, like using agents to delegate work to.
Yeah, I would say, look, I think the good bet is that agentic is the wave of the next 12 months, but at least in the regulatory side, what I would say is it's less a technology question and more of a permission question, right? And I think we're seeing with the Genius Act being passed, with Congressman Hill putting in an Unleashing AI and Financial Services Act that's being discussed, there's a trend to accept a little less human in the loop. So I think I agree with Vish. I think agentic is going to be huge next year, but I think it's less an innovation tech thing and more that I think folks are going to get more comfortable.
Thank you, Ari. Hans?
I think how agentic changes the infrastructure and behavior of all the participants in that ecosystem, and I would analogize it to the way high frequency trading changed the relationship of different participants in the capital markets. Because I could see certain types of big retailers just saying, "Okay, I'll do that transaction for a penny, or a fraction of a penny." But others will charge a lot more because there's a lot more value that might be created with your counterparty. So that will create quite a bit of fragmentation and changed behavior and changed infrastructure requirements.
That's a great perspective, Hans. Angela?
I think the technology is already here. Like if advancement stopped and AI got no better whatsoever, it would take years for all of the large companies to adopt it. So I think what we're going to see is more live use cases with higher ROI, and that adoption is just going to speed up because everyone is going to feel the competitive pressure in a good way. Better for consumers,
Right.
better for businesses, better for employees that don't need to do parts of their job that they hate.
Right. Well, with that, I think we've come to the end of our hour that we set up here. I want to thank Hans and Angela and Vishwanath once again for spending the hour with us and talking about this very interesting topic. Hope the audience got a lot out of it. Thank you, Arthi.